Hello, dear traders, welcome back. So, finally, we are having our weekly forecasting session for the coming week, and that too after 2 consecutive weeks. So, let's find out what setups we are having in the market, what long setups we are having, and what short setups we are having. Before I start this session, kindly give me thumbs up and subscribe to my channel. It will encourage me enough to come with even more quality content and to share the insight with you that not even the paid mentorship will give you. So let's start. Before we do any technical analysis, we will simply just look at the core data, which is the commitment of traders report, and this is the core data for gold. There are three categories in the core data. One is non-commercial, the second one is commercial, and last one non-reportable. We will simply follow the non-commercial category. So we are having two sections in the non-commercial category. One is for long, the other is for short. So in these sections, we just look at the contracts that are now open in the market, or let's say that were open last week in the market by the institutions. You can simply call it the institutional order flow. So look at the long section. We were having about 300,000 contracts in the long section. I mean, the institutions were long as compared to the short because they are having very less number of short contracts as compared to the long contracts. We are having around 68,500 short contracts. But you will say that how the market dropped last week, even though the institutional order flow was this much bullish on the market. So now focus a bit. This is the change section. What does it mean? It indicates the position that were added to the market or that were closed in the section of long or short. Like we are having minus 8,000 contracts here. What does it mean? These contracts were closed from the long section and they were added into the short trades, into the short contracts. And along with that, the market makers, the institutional order flow was added 3,700 contracts in the short category. So what does it mean? It means that yes, the institutional order flow is still bullish on the gold market, but the change section is indicating these positions were closed from the long and were added into the short for a reason to drop the market from that all-time high and to take the liquidity or to clear the stop losses or the sell side liquidity that is resting below the lows in order to move the market to even further to the high side. That is how it works. So now we know what happened in the court report. Now we will do some technical analysis starting from the weekly chart. So guys, look at this pattern. This is known as a three drive pattern, which is an algorithmic pattern known as for its reversible qualities. It reverses the market even if it does not change the trend completely to the downside. Still it will drop the market to a degree that it will discourage all the buyers, and then when all the people are adding shorts to the market movers or let's say the market makers, sorry, the market makers will start to rally up the market to the all-time high. But guys, now in the weekly time frame, we know that the market has touched the trend line to the upside and the market has formed a three drive pattern. What is the three drive pattern? The market create three highs in quick succession. It is the algorithmic pattern, and then when the three highs are formed in succession, the market drops rapidly to the downside. Let's move to a lower time frame, to a daily time frame, to see what setups we are having in the market. So this was the fair value gap between the first candle and the second, but this gap was filled instantly by this green candlestick. And whenever the fair value gap is filled instantly, the market then reverses quickly to the direction of the market prior to filling the gap, which is the down direction, or which is the sell trend. So what we can anticipate in the market. So look at this. Guys, always remember two things. The market do two things. And what are they? The market is either filling the inefficiency, which is the fair value gaps, that could be BC, buy side imbalance, sell side inefficiency, or that could be CB, sell side imbalance and buy side inefficiency. So this is the first thing the market do. What is the second thing the market do? The second thing the market does that, it is that it take the buy side liquidity or the sell side liquidity. Now look at the chart. What the market is doing. This was the high. What is resting above the highs? There is resting buy side. And what is buy side? I mean buy side liquidity. The market cleared it. Okay. Again, this was the second high. Why the market went above this high and then dropped to the downside? Because the market is clearing liquidity. What liquidity? Buy side liquidity. So guys, that part is done. Now the only thing the market is gonna do is to fill the inefficiencies, to fill the gaps. And look at the gaps, how many gaps we are having in the market. This is some lower gaps, we are having some gaps out here too, and this is in daily time frame. So we are having a gap, fair value gap at this point. Let's move to a lower time frame to see clearly what the market can do in the next week. Guys, the market is dropping rapidly from that very point, from the all-time high. Now what we can expect from the market is making pullbacks, and this was the fair value gap. Okay, this was the fair value gap. The market has consequently encroached this inefficiency. What is consequent encroachment? Consequent encroachment is the 50% level of the fair value gap. Now what will happen? What I anticipate the market to do? I anticipate the market to drop below these relative equal lows. Why? Because according to the retail mindset, what is resting below these relative equal lows? I mean, according to the retail mindset, it is a strong support. Why? The market touched this area one time, second time, third time, fourth, and fifth. And according to the retail traders, this area is a strong support which will hold the market from further moving to the downside. Now what will happen when the market will touch this area again? All the retail traders will buy from here. They will open long positions from this area. And what they will do? they will simply put their stop loss below this strong support, according to them, below this strong support. So this is what the algorithms will do. They will clear the liquidity, they will drop this support to the downside, they will clear all the liquidity, and clear the they will fill the inefficiencies. Look at the inefficiency in the 4-hour time frame. Look at this. They will fill this inefficiency, and then I'm anticipating the market to move to the upside. Move to the upside. This is the only thing the market, according to my experience and my analysis, I think this is the only thing the market is gonna do for now. And if the market has to continue to drop to the downside, they will still make a pullback move. They will clear this high liquidity. They will clear this high liquidity, and they will fill these gaps. And then the market will drop. Why the market will drop? Because we are having lots of inefficiencies to the downside, which the market will have to fill in order to move further to the upside. But guys, always keep one thing in your mind. These are all probabilities. Anything can happen. Uh, and and I'm saying that because the geopolitical situation can affect the markets very badly. And if any war erupts in the Middle East or in, let's say, Ukraine-Russia war, uh, any escalation happen in these wars, then we can see a rally in the gold market. It can even bring the all-time high. It can even break the all-time high. It can even reach to the 3000 level. Now guys, let's move toward the cable market. What is happening over there? So it is a daily time frame again, and I'm mentioning it for one extra time, that always remember the market is gonna do two things. It is either filling the inefficiencies, or it is either taking liquidity from the highs or lows. Okay, what type of liquidities? Buy side liquidity and sell side liquidity. uh, Look at this point. This was a previous high. What happened? It got pierced to the upside. The market took liquidity. What the retail traders would have thought, when the market was approaching this area, okay, the market was, they would have thought that this area is a resistance point and the market will hold it. This resistance point will hold the market from moving or from rallying to the upside, and they would have enter short positions, and they would have placed their stop losses just above this resistance point, okay, or from this previous high. And then we saw the market took the buy side liquidity from the upside. This is what happened. So now what we can anticipate, let's look at the core data. This is the code report for the cable, and again I'm mentioning it again and again, in order to put this thing in your minds, that always remember we will follow the non-commercial category. Look at the long contract section. We are having way more long contracts, around 188,000 long contracts. and look at the short section, short contract section. They are about 46,000. And what has happened in the change section, the market or the market maker, the institutions have added even more positions, around 5,200 more contracts in the long category. And these 4,000 contracts that are showing the negative signs that were closed from these short positions, and they were added. The negative sign means that closed from short and they were added to the long section. So it means the institutions, the market makers, the hedge funds, the banks, they are too much bullish on cable according to these data. And this data is a no joke. These are facts, these are numbers, as we can see anything here in percentage, in changes, and in total contracts. Now let's move toward the chart. So we saw, even though the market, the order flow, the bullish order flow, institutional order flow was bullish on the cable, but still the market dropped to the downside. And why is that? Because I'm saying it again, the market cleared this buy side liquidity. Now, what the market has to do is to fill the inefficiencies. What are the inefficiencies? Let me zoom in. What are the inefficiencies? They are the gaps, open gaps. This is a buy side imbalance, sell side inefficiency. This is a BC. So, the market has filled this fair value gap, and we are having even another inefficiency at this point. Uh, where is the, yes, and this is the another one we are having in the market. And below this inefficiency, we are even having an order block. Look at this is an order block. So I will extend the order block to the right. We are even having the order block, and to my surmise, the market will drop to the order block level, and then it can continue its upward movement, or it's rallying up to the high. Yes, now move to the lower time frames. In the 4-hour time frame, we are having this gap open in the market, this gap. Let me remove the last order block shaded section in order to show you the 4-hour inefficiency. This is a BC, buy side imbalance, sell side inefficiency. So the market has created this low. Okay, what will happen now? The market will not starting to rally up to the upside, or simply to rally up. It will drop to the downside. It will drop below this low. It will drop below this low. It will clear the liquidity, and with that it will fill the inefficiency that is there in the 4-hour time frame. And if the market further drops, then what we can anticipate, the market will break this low to the downside in order to take sell side liquidity, and then there we are having this inefficiency BC in the 4-hour time frame. So that is also a possibility. In that time, what we will look at, we will look at the candlestick, and we will look at the pattern if we see a classic YT 2022 mentorship model, and that too in a better time of the day, in a London session or in a New York session. We will not trade it in the Asian session. So these are the two possibilities for the gold market to complete its pullback move and start its movement to the upside. Either it will drop below this low to fill this gap, this inefficiency, and to make a YT 2022 mentorship model, which uh, which I assume you must have went through on the ICT channel, or if it doesn't match the pattern at this area, then the market will drop to this point and then it will starting to rally up to the upside. So these are the two possibilities and two setups for the cable in the coming week. Let's move toward the Euro USD. Before we do any technical analysis, let's look at the code data, what the code data is indicating. Give it a minute, guys. The network is not working properly. There might be some abruption in the network. So this is the code report, last week report for the euro. Similarly, again, I'm mentioning it again and again that we will follow the non-commercial category. We are having the long section, long contracts, and section for short contracts. We will simply look at the numbers. Long contracts we are having around 188,000 and short contracts we are having around 153,000. Similarly, we will also look at the change section. What does it mean? The positive sign with 8,992 contracts. It means the institutions, the banks, the hedge funds had added these contracts in the long section of contracts. And these 2,165 contracts with the negative signs were closed from the short category, from the short contracts, and they were also added in the long contracts. It means the institutions and the banks, the hedge funds are bullish on the euro. Let's see what had happened. Even though the, the data was bullish and in favor of a bullish trend, the market dropped in the last week. Why it dropped? Let me give you again an indication. This was a high, and above this high, there is resting buy side. Okay, again, the same concept of tail traders, they are considering it a strong resistance level. They have placed their stop losses, or let's say there are also some breakout traders who believe in breakout trades. They had placed their pending orders above this high, and they assume the market will trigger their order and rally up to the to let's say to the all-time high. But that's not gonna happen. What the market do, it always takes out traders from the market, takes the liquidity and drop. Where it is dropping, see, it is dropping to an inefficiency, that is a BC, buy side imbalance, sell side inefficiency. Look at the bodies of the candles, they are closing in the inefficiencies. Remember guys, the wicks do the damage, the bodies tell the stories. So don't focus on the wicks, they are just doing the carnage. Now let's move to the lower time frame to figure out what is happening. So what can happen in the coming week? There are plenty of setups in the market. There is this inefficiency. There is, I mean, I apology, this one. why it is moving. Let me draw it properly. This inefficiency, uh, there we are having this high. Above this high is resting buy side. Then we are having look at this, guys. These are these two. They are relative equal highs, or not even relative. They are equal highs. What does it indicates? That the market or the retail trader is considering this area a strong support. So now if the market drops, one thing the market will do, it will take liquidity from these points, these relative equal lows, and it will come to the downside. That is what I'm anticipating. Even though the market can return from this area by forming a YT 2022 mentorship model, if it doesn't form that model in the higher time frame, like in the early time frame, 4-hour time frame, look at the market in the lower time frames, 15-minute time frame, 5-minute time frames, and there if you see any pattern is forming, then enter uh, the long position and let your trade run to the upside. How much? At least above this point, which is a relative equal highs. So guys, there has formed these equal lows, and below these equal lows there is also this inefficiency, BC, buy side imbalance, sell side inefficiency. The market can also come to the downside, fill this gap, and then complete its pullback move and to move to the upside. These are the probabilities that we are having in the market. Now let's move toward AUD USD. Guys, before we do any technical analysis, we will simply look at the institutional order flow, institutional traders, what they are doing in the court report. And before that, look at the massive move to the downside. And guys, this is not an 5-minute time frame, this is a daily time frame. And see how many down close candles we are having. 1 2 3 4 5 6 7 8 9. 9 down close candles. Amazing. Now look at the core data for AUD, Australian dollar. Similarly, once again, and lastly, we will be following the non-commercial category. We will have a look at the section for long contracts, and we will look at the section for short contracts. Here, I'm flabbergasted that AUD is having a lot of positive correlation with gold, and the institutions are too much bullish on gold, but I'm amazed that they are short on Australian dollar. Let's find out why. So the long contracts are less as compared to the short contracts. It is indicating that the institutions are giving a sign that the market is dropping massively to the downside. Now look at the change section at the long category. We are having minus 9,339 contracts that were closed from these long contracts. And what does it mean? These contracts were added into the short contracts. Along with that, below the short section numbers in the change, we are having this positive sign with 10,588 contracts. They were added into the short contracts. by the institutions, by the hedge funds, and by the banks. It means the institutions are bearish on Australian dollar. So zoom it out a bit to see, guys. At this point I had drawn this CB in the daily time frame. CB is sell side imbalance, buy side inefficiency. The market came, the market filled, the market filled the gap, the inefficiency. Now look at the wicks. So the wicks do the damage and the bodies tell the story. How? Look at the body of the candlestick that is in between of the two candlesticks. The greener one, I am talking about this. How it is closed at the high of the inefficiency, and after that the market dropped rapidly to the downside. So now what we can anticipate, uh, as you guys can see, the market has took liquidity from these lows, even though from this low. Okay, what happened? The market filled the gaps here. The market filled the inefficiency at this point too. So now this area, this red candle is an order block. This is an order block, and I anticipate, first move to the lower time frame. I anticipate that the market will not breach this area and will return to which area the market will can make a pullback move to this inefficiency, which is a CB, sell side imbalance, buy side inefficiency. And from that point we will look for the entry on the downside. Now you will be asking that even though the institutions, the banks and everything, the best traders of the world are bearish on Australian dollar, so why we are not selling it instantly? Because if we sell the market at this point, it means, uh, let me pull out the Fibonacci tool. Let's say this is below even the 23.6 level. So this is a discount area where we will be selling the market, and we don't sell the markets at the discount area. We only buy at the discount, where we will sell the market, where we will enter short in the market. We will enter short in the market above the 50% level, which will be premium, and at the premium level we will short the market. So what we are having at the premium level, we are having this inefficiency. Even though the market can break this high and the market can come to fill another inefficiency which we are having at this point, which is not filled, is open and to be filled by the market, and then we can enter a short position in the market. Not instantly, we will move to the lower time frames, let's say to M15 M5 time frame, and we will look for the any optimal trade entry. We will look for the YT 2022 model to form, or something similar, to enter at the premium level. So guys, these are the setups that I'm anticipating that can happen in the coming week. So wishing you all the best to all of you. Till talk to you to the next time. Take care.